Let us be honest for a moment. Most people believe that the United States government is run by the person living at 1600 Pennsylvania Avenue. They think that every few years, they go to a booth, pull a lever, and decide the direction of the global economy. It is a comforting thought. It gives the average person a sense of agency in a world that feels increasingly chaotic. But if you have been paying attention to the plumbing of the financial system, you know that the real power does not live in the Oval Office. It lives in the spread between the Fed funds rate and the yield on a 10-year Treasury note. And right now, that power has just been consolidated in a way that the mainstream media is completely missing. For decades, we have been told that the Federal Reserve is an independent body, a group of sober, objective academics who look at charts and make decisions for the good of the American people. We are told they are the referees of the game. But what happens when the referees are replaced by the star players of the opposing team? What happens when the person in charge of printing the money and the person in charge of spending the money both happen to have the same mentor? And that mentor is not a politician or a professor, but a man who made his fortune by betting against entire countries. Welcome to the end of central banking as you know it. We are entering the era of the new guardians. To understand what is happening, you do not need a degree in political science. You need to understand how a hedge fund works, because America just became the largest family office in the history of the world. According to a recent report from the Wall Street Journal, the two most powerful seats in the global economy are being filled by Kevin Warsh and Scott Bessent. To the casual observer, these are just names on a government payroll. But to Wall Street, these are the chosen sons of one man, Stanley Druckenmiller. Imagine if you were playing a game of poker. On your left is the guy who controls the deck, the Fed. On your right is the guy who decides how much the chips are worth, the Treasury. And then you find out that both of them worked for the same legendary gambler for 20 years. They talk to him every single day. They share the same DNA, the same instincts, and the same ruthless commitment to winning. You would probably realize very quickly that you are not a player in this game. You are the liquidity. This is not a conspiracy theory. It is a structural reality. Stanley Druckenmiller is arguably the most successful investor in human history. He managed George Soros's quantum fund, and later his own firm, Duquesne Capital. For 30 years, he delivered an average annual return of 30%. Most importantly, he never had a losing year. Not in 1987, not in 2000, and not in 2008. He is the man who broke the Bank of England alongside Soros in 1992. He does not care about ideology. He cares about what works. And now, his protégés are in the driver's seat. Kevin Warsh, the man likely to lead the Federal Reserve, spent years at the Fed during the Great Financial Crisis, but he started his career at Morgan Stanley and spent a decade working closely with Druckenmiller. Scott Bessent, the new Treasury Secretary, was the chief investment officer for Soros and a key partner to Druckenmiller for 30 years. In the world of finance, we call this a vertical integration. The supply chain of money is now under one single philosophy, the philosophy of the hedge fund predator. Now, you might be thinking, surely it is a good thing to have smart people in charge. After all, the previous guys were academics who thought inflation was transitory until it was at 9%. But there is a catch. A hedge fund manager's job is not to make sure everyone wins. Their job is to manage risk for the fund. And in this scenario, the fund is the United States government, and you are just an unhedged asset. Throughout this video, we are going to deconstruct how this new regime will operate. We will look at why the famous 2% risk rule that everyone gets wrong is the key to understanding their next move. We will look at why they are suddenly obsessed with the silver market and why Druckenmiller dumped all of his Palantir stock just when everyone else was buying in. And most importantly, we will show you how to survive a world where the house is no longer run by bureaucrats, but by sharks. Winston, stop sniffing the silver coins. We have work to do. To predict what the new guardians will do to the economy, we have to look at the brain of their mentor. Stanley Druckenmiller operates on a level that most retail investors cannot even comprehend. And this brings us to a major point of confusion among the audience. In our previous discussions, people pointed out a massive paradox. They say, how can Druckenmiller say he never risks more than 2% of his capital on a trade, while also saying that when you see a good opportunity, you should bet the entire house? On the surface, it sounds like he is talking out of both sides of his mouth. But this is where the academic world fails and the hedge fund world wins. This is the logic of position sizing. Think of it like this. Imagine you have $100,000 in a safe. That is your total capital. You go to a casino and you sit at a blackjack table. The 2% rule means that even if you lose every single hand you play today, you will not lose more than $2,000 of that total capital in the safe. That is your floor. It is your survival mechanism. But here is where the predator instinct comes in. If the dealer accidentally flips over his card and you see it as a 6, and you have a 20, the odds have swung violently in your favor. A normal investor might still bet their usual $10, but a Druckenmiller protégé will take that entire $2,000, the 2% they were willing to lose today, and they will leverage it. They will bet it all on that one specific moment where the certainty is high. This is exactly how Kevin Warsh and Scott Bessent will run the American economy. They are not going to sit around waiting for quarterly GDP reports that are already 3 months old. They are going to look for the inflection points. For years, the Fed has operated like a legacy GPS system. It tells you to turn left after you have already driven into the lake. They call it being data dependent. But people like Bessent and Warsh are forward-looking. They do not care where the car was 5 miles ago. They care about the cliff 5 miles ahead. According to data from the Treasury Department, the United States is currently adding $1 trillion to its debt every 100 days. We are sitting on $35 trillion of total debt. The interest payments alone are now costing us more than our entire defense budget. To a traditional academic, this is a mathematical problem to be solved with higher taxes and slow spending cuts. To a hedge fund manager, this is a distressed asset that needs to be restructured. When you have a friend at the Fed and a friend at the Treasury, restructuring becomes a lot easier. Scott Bessent at the Treasury can decide to issue more short-term debt to keep interest rates artificially low for the government. At the same time, Kevin Warsh at the Fed can provide the liquidity to make sure that debt always finds a buyer. In the trade, this is called a carry trade. But when the government does it, we call it policy. The goal for the new Guardians is not to pay back the $35 trillion. They know that is impossible. The goal is to outrun it. They want to create enough growth, or enough controlled inflation, to make that debt feel smaller over time. But who pays the price for that controlled inflation? You do. Your savings are the fuel for their restructuring project. This brings us to a very specific insight from a viewer named David, who asked why Druckenmiller is so flexible that he can change his mind in 24 hours. This is the most dangerous trait of the new Guardians. They are not married to their ideas. In late 2024, while the entire world was chasing the AI hype, Druckenmiller quietly exited his massive position in Palantir, ticker symbol PLTR. Why? Because he realized the valuation had outrun the reality. He did not wait for the crash. He took his profits and moved on to the next hunt. When these men run the Fed and the Treasury, they will apply that same cold-blooded flexibility to interest rates. They might tell you today that they are going to cut rates, but if they see a spike in commodity prices tomorrow, they will pivot so fast it will give Wall Street whiplash. If you are a retail investor trying to follow a 5-year plan, you are going to get crushed. You are trying to play a game of checkers, while the new Guardians are playing high-frequency algorithmic chess. If you want to see the fingerprints of the new Guardians, you have to look where the mainstream media refuses to go. You have to look at the commodities market, specifically the silver market. A viewer named 2138, dude pointed out something very strange. He noticed that the spot price for silver, the price you pay to actually get a physical bar of metal in your hand, was 13% higher than the futures price on the exchange. In a normal, healthy market, this should not happen. Usually, the futures price is slightly higher because it accounts for the cost of storing the metal over time. When the spot price is much higher than the futures price, it is a massive red flag. It means there is a physical shortage. It means people are so desperate to hold the real thing that they are willing to pay a massive premium to skip the line. According to reports from the London Bullion Market Association and the Comex, silver stockpiles have been declining for months. This is happening because silver is no longer just a shiny metal for jewelry or coins. It is the backbone of the green energy transition. You cannot build a solar panel or an electric vehicle without it. But here is the connection to our new Guardians. Men like Scott Bessent and Kevin Warsh understand that we are moving into a world of hard assets. They know that the $35 trillion of paper debt is a house of cards. When they take control, they are going to prioritize the stability of the dollar's purchasing power over the stability of the stock market. This is a massive shift. For the last 20 years, the Fed's secret mandate was to keep the S&P 500 going up. If the market dropped 10%, the Fed would rush in to save it. We called it the Fed put. But the new guardians do not care about your portfolio of overvalued tech stocks. They care about the solvency of the state. If they have to let the stock market crash to save the dollar and stabilize the commodities market, they will do it without blinking. Druckenmiller has famously said that the current fiscal path of the United States is like a slow-motion car crash. He knows that at some point, the world will stop accepting paper promises. This is why we are seeing these anomalies in silver. The smart money is already moving out of the digital casino and into the physical vault. This brings us to the question of Palantir. Many people were shocked when Druckenmiller sold his shares. They thought AI was the future. And it is. But Druckenmiller knows that even the best technology cannot survive a liquidity crunch. When interest rates stay higher for longer, which is a very likely outcome under a Kevin Warsh Fed, companies that trade at 100 times earnings are the first to get slaughtered. The new guardians are going to be hawks, not because they hate growth, but because they understand that you cannot have growth without a stable foundation. They would rather see a 20% correction in the Nasdaq than a 50% collapse in the dollar's international standing. For the average person, this is terrifying. You have been trained to believe that the government will always print more money to keep the party going. But the new guardians are not party planners. They are liquidators. They are here to clean up the mess left behind by the academics. If you are holding a bunch of paper assets and hoping for another round of quantitative easing, you are betting against the smartest guys in the room. They are not going to print money to save you. They are going to print money to buy up the real assets once you are forced to sell them at a discount. Winston, stop looking at my wallet. There is nothing but paper in there anyway. Let us look at how the machinery of the new guardians will actually work on a day-to-day basis. This is what we call the puppet architecture. Normally, the Treasury Secretary and the Fed Chair have a tense relationship. The Treasury Secretary wants to spend money to make the current administration look good for the next election. The Fed Chair wants to raise interest rates to keep inflation from spiraling out of control. It is supposed to be a system of checks and balances. But with Scott Bessent at the Treasury and Kevin Warsh at the Fed, that friction disappears. They are not two separate entities. They are two hands of the same brain. According to financial analysts at Bloomberg, this creates a situation called fiscal and monetary coordination. In plain English, it means they can rig the game from both sides. When the government needs to spend money on a new infrastructure bill or a military conflict, Bessent can issue the debt. Warsh can then adjust the Fed's balance sheet to make sure that debt is absorbed without causing a spike in interest rates that would kill the housing market. They can perform a delicate surgery on the economy that a normal Fed chair would be too scared to attempt. But there is a dark side to this efficiency. When the government and the central bank are perfectly aligned, there is no one left to say no. There is no one to stop the debt from growing. They are just making the debt more efficient. This is why Druckenmiller is so influential right now. He is the architect of this philosophy. He has spent his career finding the cracks in the system and exploiting them. Now, he has placed his best people in the positions where they can prevent others from doing the same to the United States. It is a defensive play for the empire. A viewer named Ron Graham mentioned that he does not see how Warsh can serve two masters. But that is the secret. He is not serving two masters. He is serving one philosophy. The philosophy that the market is the ultimate truth, and that the government must be run like a profitable enterprise. This sounds great, until you realize that in a profitable enterprise, the inefficient parts are cut away. And to a man like Kevin Warsh, Social Security, Medicare, and the middle class's purchasing power are all very inefficient. We are going to see a move toward what they call a sound money policy. This sounds noble. It means they want the dollar to be strong. But a strong dollar makes it harder for you to pay back your mortgage. It makes it harder for American companies to export goods. It is a policy that favors those who already have wealth and punishes those who are trying to build it. The new guardians are not here to be your friends. They are here to ensure the survival of the United States as a financial entity. If that means your retirement account stays flat for a decade while the debt is restructured, they will consider that a victory. According to data from the St. Louis Fed, the velocity of money is still near historic lows. This means that despite all the money printing, the money is not circulating in the real economy. It is stuck in the financial system. The new guardians are going to keep it that way. They want to keep the inflation in assets, where they own everything, and keep it out of the grocery store, where you might start a riot. It is a high-stakes game of hide-and-seek with the truth. and they are the best in the world at hiding it. So, where does this leave you? If you are not a billionaire with a direct line to Stanley Druckenmiller, how do you survive the era of the new guardians? The first thing you have to do is stop thinking like a consumer and start thinking like a predator. You have to adopt the Druckenmiller mindset. First, you need to understand the 2% rule for yourself. Stop betting your entire life savings on the latest meme stock or a crypto coin you heard about on a podcast. Your capital is your survival. Protect it at all costs. But when the new guardians make a move, and they will, you have to be ready to act with conviction. When the Fed and the Treasury are coordinated, the market moves will be violent and fast. We will see massive rotations. One day everyone will love tech. The next day everyone will be screaming for gold and silver. You cannot be slow. You have to be liquid. Second, watch the silver market. As the viewer pointed out, the physical shortage is real. When the new guardians take over, they will likely allow the prices of hard assets to find their true value. They know they cannot keep the lid on the pressure cooker forever. Owning physical silver or gold is not about getting rich. It is about having a seat at the table when the paper game ends. Third, pay attention to the exits. When a man like Druckenmiller exits a stock like Palantir, he is telling you that the easy money has been made. Do not be the person who buys the top because you saw a flashy headline. The new guardians thrive on your FOMO. They need you to buy the assets they are selling so they can move into the next trade. According to a study by Forbes, the wealth gap in America has never been wider. The new guardians will likely make it even wider. Not because they are evil, but because their tools only work for the wealthy. High interest rates help those with cash. Strategic inflation helps those with debt-backed assets. The middle class is the only group that gets hit from both sides. You have enough money to be taxed, but not enough to have a family office to protect you. Your only defense is education. You need to understand the plumbing. When Scott Bessent talks about fiscal responsibility, he means he is going to make the government more efficient at taking your money. When Kevin Warsh talks about price stability, he means he is going to make sure your wages do not grow faster than the cost of living. This is the end of central banking as a social service. It is the beginning of central banking as a corporate strategy. The house is now run by the smartest sharks in the ocean. You can either be a pilot fish that swims alongside them and eats the scraps, or you can be the bait. Winston and I choose to swim. The era of the new guardians is here. The Fed is no longer a government agency. It is a subsidiary of Wall Street's finest minds. The game hasn't changed, but the players just got a lot better. Are you ready? Because they certainly are. I am Felix Pre. This is the GOAT Academy. And Winston, stop trying to eat the chart. It is not a real shark. Yet.